Imagine waking up one day, checking your phone, and seeing $4,000 deposited into your account. Completely passive income, no work required. And the craziest part? You started with just $30 a week. Sounds unbelievable, right? Most people assume you need a huge amount of money to make real income from investing. But today, I'm going to show you how you can turn a small, consistent habit into financial freedom. This video is split into 3 parts. First, we'll cover exactly what stocks to buy, companies that will pay you just for owning them. Second, we'll dive into how you can compound your earnings, making your money work for you so it grows exponentially over time. And finally, I'll show you how to keep your income steady, even in a market downturn, so you never have to worry about losing money. Now, let's paint a picture of where this can take you. Let's say you're 22 years old and you commit to investing just $30 a week. Over time, this money is going into solid, high dividend-paying stocks. At first, it's not much, just a few dollars here and there. But by the time you're in your 40s, those investments are paying you thousands of dollars every single month, completely passively. That's money for vacations, covering bills, or even retiring early. And here's the thing. This isn't reserved for the ultra-wealthy or finance experts. Anyone can do it. The hardest part? Just getting started. But here's the catch. Most people never do this. Why? Because they get distracted by get-rich-quick schemes, trying to time the market, or investing in risky assets that never pay off. That's why in this video, we're narrowing it down to one proven, reliable strategy: dividend income investing. This is how the wealthy get richer while doing nothing, and it's how you can do it too. So let's get into the first step: buying dividend stocks. You're not just buying any stocks, you're buying companies that pay you every single quarter just for holding on to their shares. And not only do they pay, but they also increase those payments over time. Some of the best industries for this are consumer staples, utilities, and healthcare, companies that people rely on no matter what happens in the economy. Think of companies like Johnson & Johnson, Procter & Gamble, or Coca-Cola. These are brands that will be around for decades, continuing to generate cash flow and pay investors. Now, you might be wondering, how much can you actually make? Well, let's say you start with a stock paying a 4% annual dividend. That means for every $1,000 you invest, you're getting paid $40 a year just for holding it. But here's where things get interesting. These companies increase their payouts every year, and you're going to reinvest those dividends instead of cashing them out. The real power isn't just in earning dividends, it's in letting those dividends buy you more shares so you earn even more. This is how your wealth snowballs over time. Which brings us to step 2, compounding your earnings. Instead of spending the dividend payments, you use them to buy more shares. This is where dividend reinvestment plans, or DRIPs, come in. Many brokers allow you to automatically reinvest your dividends, meaning your earnings start earning even more. And this is where the magic happens, because every share you buy with your dividends also starts paying dividends. It's like a snowball rolling down a hill, getting bigger and bigger over time. Let's break it down with real numbers. If you start investing $30 a week and reinvest every dividend, in 20 years, you could have a portfolio worth over $250,000 generating $10,000 a year in passive income. And if you keep going, that could turn into a $1 million portfolio paying you $40,000 a year or more, just for holding onto stocks and reinvesting. And what's even crazier, most people will spend $30 a week on things they don't even remember: fast food, coffee, unnecessary subscriptions, without realizing they could be setting themselves up for life-changing financial security instead. Now, you might be thinking, but what if the market crashes? Won't I lose everything? And that's where step 3 comes in: keeping your income steady. The key is diversification. Instead of putting all your money into one stock, you spread your investments across different industries. That way, even if one sector struggles, others will keep paying dividends. Another key factor? Stick with companies that have a low payout ratio. This means they're not paying out all their profits as dividends, so even if the economy slows down, they can still afford to pay investors. A great example is McDonald's. This company has been paying and increasing dividends for over 40 years, even during recessions. When you build a portfolio of stocks like this, your income stream remains strong, no matter what happens in the market. Another way to protect yourself? Consider holding some dividend ETFs. These funds invest in dozens or even hundreds of dividend-paying companies, which means you don't have to pick individual stocks yourself. Some great examples include SCHD and VYM, 2 funds that focus on high-quality dividend stocks while providing instant diversification. By following these 3 steps, buying the right dividend stocks, Reinvesting every dollar and diversifying your holdings, you'll be on the path to financial freedom. And remember, it all starts with something as small as 30 a week. That's less than what most people spend on coffee or eating out. The difference is, while they're spending, you'll be earning forever. Now, if you're serious about making this happen, hit that like button so YouTube knows this is the kind of content you want to see. And if you want to follow along as I break down more investing strategies like this, make sure you subscribe. Let me know in the comments. What's your dividend investing strategy? Are you just getting started, or have you already built a portfolio? I'd love to hear your thoughts. This is how you create long-term wealth while doing nothing. And it all starts today. The sooner you start, the faster you'll reach that $4,000 a month goal. Thanks for watching, and I'll see you in the next video.